Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, December 21st. Economic data for today is not as important as other days, but we have still to take a look. NBA 30-year mortgage at 7 o'clock. Then we have at 10, half an hour after market open, existing home sales, month over month, and overall home sales for November, and consumer confidence. So we have a little bit of home sales sector. We are expecting still getting a negative percentage of home sales and a decrease in the number. And about consumer confidence, we are expecting a little bit higher, but we will see. Then we have EIA, crude, gasoline, refinery, etc. stocks. But I think consumer confidence and home sales will have maybe a little bit of impact, but still until Thursday, in which we have a GDP growth rate final, and Friday, the big PCE. PCE on Friday, I think today is not as important, but still we have to take a look. And let's check the charts right now. This is the Nasdaq 2-hour time frame. As I was mentioning yesterday, I'm taking a look to this descending trend line that we have 5 consecutive red days on the Nasdaq, and we are right now trying to build some kind of support. Still not doing big higher highs. We have a doji down here yesterday, and we are right now, this is a gravestone doji, not looking good right now. This blue dot line is last week low, and this blue line dot line up here is last week high. So still in the low part of the range and getting a lot of red days in continuation. So this is not the week to be a hero, to try to find bottoms. Just take a look to the market, stay up to date to the news, and just wait for your opportunities if you are looking for trading. If we check the 1 minute time frame in the overnight, we are seeing sideways consolidation after yesterday's more or less flat day. Tesla had a pretty bad day, 8%. We will talk about it later. But right now, Nasdaq is holding yesterday's close, this level, and trying to, buyers are pushing these lows, this level. So 11,200 looks like decent support, but we are still trading in a range. We are not breaking pre-market highs and not breaking yesterday's high. So we are more or less sideways, waiting for news, waiting for some kind of movement and digesting what happened yesterday. A little bit of a bounce, but not convincing, at least in my opinion, in my eyes. I have still to see big moves to the upside to be confident on taking longs. So right now, I'm still looking for shorts. I'm still seeing weakness, and it is what it is. Apple did good yesterday, finishing flat. As you can see in the after hours, a lot of people was buying. Microsoft, the same, finishing in the Apple levels. But look at Tesla. Tesla is not looking good. We filled the gap, this gap, from November 2 years ago, November 2020, we filled that gap. But still, we have this August 2020 level down here around this structure that we had previous the big move and the start of the second move into 2022. So these 120 and 130 levels are more or less interesting for people to buy, but right now, don't try to catch a falling knife. This is not looking good. Tesla is free falling, and looks like Elon Musk has a lot to do on this. The cause of all this is that people maybe are worried about Elon Musk, how he manages Twitter, Tesla, and some other things that are on the media. But I don't think Tesla is right now a buy. It is my opinion, but I'm waiting for some kind of support structure in between these two levels, 140 and 120. Amazon, more consumer discretionary being punished. You can see we have still a gap up here, but we are looking quite bearish, looking to break down March 2020 levels at 83. If we check back then, we have this big start of the move. So I expect some kind of support at these levels at 83. At some point, investors, long-term investors, will try to add down here to their portfolio, and I'm waiting for that. Google also looking quite well. It's holding better than others. It filled the gap, so we can remove this. Fill the gap, also this gap. So right now we are looking at January 2020 levels at 85, but it's holding better than Amazon and Tesla. Apple and Microsoft. Apple, look at this, is touching this support at 130, and Microsoft is I think is the best, in my opinion, of all the Nasdaq big tech stocks. What else? Crude oil is, after bouncing off 70, remember, US is replenishing their strategic petroleum reserves at $70 per barrel. So we bounce off that level, we pull back, we bounce off 74, previous pivot, and now we are looking quite bullish. Still, we have this series of lower highs and lower lows. We are still in a downtrend, but breaking this first pivot is the first sign of some kind of relative strength in the oil, in crude oil. Natural gas, after Europe announced yesterday that is doing a price cap of 180 euros megawatt, I think that price cap is not going to be helpful, at least in the short term, for the markets. It will be super helpful for Europe to manage and to handle the crisis, the energetic crisis, and how families are paying this super high price on energies. That will be helpful, but for the markets, it just is being smacked right now at 5.56, and I don't know, below here we might see 5 again as we saw in October. But right now, be careful, because I expect more weakness to come on natural gas. Dollar still super weak, and after Bank of Japan yesterday announced that it's going to support the yield curve on the 10-year, that it's preparing some interest rate hikes from Bank of Japan for sure. And right now, markets are digesting that news, that information, and in the mid-long term, that would affect a lot of sectors in the overall markets. Right now, people are worried, but we are not seeing any big change on the markets apart from the forex. But Bank of Japan will affect for sure. That kind of support to the bonds market will affect the dollar, and I expect dollar to reach 100 and reach this support down here, support at 101. And in summary, more weakness to come on the dollar. Yields are red today after trying to consolidate. The 2-year is 0.50% in the red, holding 4.24%. And the 10-year, after yesterday's and previous days, this week's rally, we are holding at 3.68. So we are still seeing a relative strength in yields now that Feds are still hawkish and saying that maybe they will continue raising rates throughout 2023, and markets are pricing in right now in April 2023. Markets are pricing 4.8 terminal rate, Remember, Feds are pointing up here 5%, so there's a gap, a mismatch on what markets are pricing in and what Feds said in the last FOMC meeting press conference. So be careful with that, because I think yields will continue pushing higher, and that could cause a lot of fear in the markets. September still 4.75, and after that December sees a little bit of rate cut to finish the year 4.43. So as always, we will be pushing higher until 5%. In April, we will be there until September. So there, people have no idea how much pain these kind of levels of interest rates will do to the market. So be careful. That will smash the economy for sure, US economy. And then at December to the end of the year, we'll be cutting maybe one, it's not 4.5, it's 4.4. So one cut or maybe two throughout September until December, but finishing the year 4.4, still super high. So don't think that 2023 is going to be super bullish and it's going to be better than 2022. We have just started. So it is what it is. You have to understand what is coming and what Feds are doing. So don't just blindly follow what the media says about this is the bottom, because the economy is really sick and we are going to see a lot of pain next year until the end of the year, in which maybe finish 2023, start of 2024, we might see rates decreasing until the 3% before 2025. So this is what will come. I'm telling you, just be informed about the market. Don't have a fixed bias, and just learn the markets and understand what is coming and what the markets, all sectors are doing. Right now, XLK is bouncing, is having a relief rally. We filled this gap, this previous gap, and we are it's just a one green day after 5 red days. So don't be naive and think about, okay, this is a higher low and I'm going to buy, because I think we can see something like this, and then we can see something like this. So be careful with this kind of moves. This is how markets move when are bearish, and I still think after what happened last week on FOMC and the press conference and the change in the markets regarding interest rates and how hawkish are Feds, I think we can see new lows starting 2023. So be careful with that. XLY is having a really nice day today. Finished red. Consumer discretionary is right now 1.40 in pre-market. That's good news, because right now we are just in between these two big levels, but still consumer discretionary, US consumer is being hit the most. And if we check consumer discretionary versus staples, I mean XLY, US consumer is being hit very, very hard. So demand destruction, it's what Feds want. So we are now seeing the results of all these interest rate hikes right now into Christmas. So it was expected. Still, I don't like seeing this, but this is the consequence of what Feds are doing. Finally, I think that's all. Let's go back to the Nasdaq and see if anything changed. Well, I don't see any news. So we are trading sideways. Don't get caught in a one green day thinking about, okay, I will be looking for longs, because we might see a higher high from yesterday and then start continuing lower, do a quick rotation to the downside and go through 11,100. So I will be watching what happens up here in 11,300. Actually, if we change to the 30-minute, I have a level up here at 11,300. So I'm watching these levels to see if they break, and then 500. That would be great to see another continuation green day. No, I mean, yesterday was chopping around, but a nice move breaking this zone would be nice, and this trend line is what I'm watching. If we go high, false break, and start going down, prepare, because maybe we are just bear flagging and going into 11,100. So be careful with the traps and be patient as always. Thank you for your time. If you have any questions, you can comment down below. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time and see you in a couple of hours with the market update at noon. Remember, discipline and risk management are key for success. Stay safe, everyone.